Welcome to the Stage Analysis Weekend video. It is Sunday the 25th of July, so we're going to cover a few areas today. We're going to have a look at quickly have a look at the major indexes, market breadth, a bit of what was going on in the sectors and groups, and then I want to run through some of the stocks on my focus list this week. A few of them obviously popped up during the week in the watch list and have done multiple times, and I've done some markups over the weekend, and some of these have appeared on PTC through the week and over the weekend. But I want to go into a little bit more depth on a few of them, and because there's a bit of a theme going on with some of the growth stocks with some bullish engulfing candles near the top of bases. So I'll cover off a few of the key ones that I'm looking at, and there was quite a few, but I've cut it down to only a couple so that we can focus in a bit more. Okay, let's begin. Let's start with the Nasdaq Composite as always. So we use this as our major index to track the kind of stocks that I'm trading the most. So we had a further stage 2 continuation breakout attempt this week. We closed on Friday at another new high. Volume was around average. We're just coming out of this short-term backing up action within here, so could within a smaller base in here, if we drop down to a lower time frame on this, you can see this could be an up thrust or secondary test, as this could be considered a buying climax and then a automatic reaction. So this could be a secondary test and we could come back in again. So, but if we go out to the weekly, I think the weekly gives us a slightly different perspective on this. So the fact that we've got this weekly bullish engulfing candle has a bit more significance for me than obviously what's going on the shorter term. So although there's obviously a possibility that it could be a up thrust or secondary test, this weekly bar gives me a bit more confidence that it could actually push through to the upside and continue on through in stage 2. So we broke out of the stage 3 sort of area that we were in earlier, about a month or so ago, and we made the stage 2 continuation. We've had some backing up action. It was a strong rebound this week, although we had almost 5 straight days up after the flush early on Monday. So I would expect a little bit of back and fill, but with spring type moves like that, you can sometimes not get a back up straight away. So the small caps we'll have a look at in a minute. They did start to back up near the end of the week for a couple of days, so started putting in tests on the spring type action that they were showing. So let's have a look at that in a second. This is the Nasdaq second 100 stocks, the Nasdaq QQQJ, which is the next gen 100 ETF. This basically tracks the CanSlim type stocks. It's very similar to the IBD 50 type stocks. It's the sort of large to mid cap stocks in the Nasdaq that are not in the Nasdaq 100. So I think you get names like Roku and things like that in there, but it does a pretty good job of tracking the kind of stocks that I'm trading. So, and this kind of sums up the last 4 or 5 months in terms of the choppy market action we've been having. One thing I have noticed in this chart, which I think is significant, is that you see obviously we had a buying climax up here and then a flush out into a short-term shakeout / selling climax in here, and we formed this lower base. You can see the volume in this area was much more volatile, a lot more supply in this area. And as you can see, as this has developed, if we split this into 2, so if we put this into here, you see this area here, you can see all this volume down this lower area here. It's much higher, and obviously into the topping process there. And then if you take the current area, you can see that we're much lower than that on average. The current volume is, if you see over the side of the chart here, we're at least half of what we were doing in the left hand side of this base. And so as this spring type action we had in here, local spring and then a test and follow through, and then we've had a little mini sign of strength rally, and then we've had some backing up action in here, but it's a bit of a deep back up on this one, came all the way back down to its 50-day moving average, then came back out again. So we still haven't officially got out of this stage 3 range that it's in at the moment, but we could, with this change of behavior in here, you see the pullbacks have been generally smaller until this one we've had in here, but they've generally been less volatile. and the volume stayed very light throughout. So this does look like a bit of a change of behavior in here from what we were seeing over here. So we had our initial change of behavior as we entered the trading range. We've had a further change of behavior over here where we look like we're potentially exiting the trading range and going to attempt to make a stage 2 continuation breakout potentially if it can clear this near-term pivot here. If we look at the small caps, this is making a pretty similar picture. So this is the IWM, which is the Russell 2000. So we're in a stage 3 range at the moment. It's the weakest of the major indexes in terms of, if I show you the, if we got the charts. So if you see in here in the table, see relative strength wise, this was IWM was bottom last week, and it's come up a few places this week with a good move that it's had. If we come back into the chart, you can see we had a local spring within here, and then we topped out on Wednesday, and it's pulled back for 2 days, but a bit of a demand tail on there on Friday, and it's forming a potential test. So we'll see if this starts to follow through and move back to the upside on Monday, or whether it continues to the downside yet, so we can get a deeper test. But at the moment, from this undercut and rally type spring day that we had on Monday, which I started tracking, which I talked about in my swing trade section on the site a fair bit during the week, and that there was a very large number of results for undercut and rallies on Monday, and then I started tracking it through the week, and then the vast majority, I think over 90%, have remained above Monday's low there. So it's been a good, so far, a successful spring attempt. And so we're seeing this in the small caps here, where it's not even pulled back to half of the move that it had earlier in the week. So it looks like it's a good strong test so far, but we obviously still are in a pullback phase here, but we're meeting some trendline resistance again. We're back at the -2 ATR level there. So if this can start moving back through and get through the -1 ATR level, I mean, if that can move through its 21-day EMA there in this near-term pivot, then that would be a very, very bullish development. And then the small caps would also be participating in the move that we saw during the week in some of the growth stocks and software names and internet names, etc. Right, next up, let's have a look at some of the groups as a whole. If we see this is the thumbnail charts of the major indexes and the major sectors. So, for example, gold, treasury bonds, Russell 2000, Nasdaq 100, S&P 500, and then all of the 11 sectors, so materials, communication services, etc. So one thing I note on these to start with is obviously gold and the IEF, the treasury bonds, both in stage 1 here. So we got a bit of topping action on the treasury bonds, where it looks like it's formed the near-term high for the stage 1 base. So this would be the top of the stage 1 range if it now fails to get back above that level. Whereas you can see in the indexes where the Russell had some spring type action here within its stage 3 range, whereas the Nasdaq 100 made a continuation breakout to new highs. And the thing about the Nasdaq 100 chart, which you'll see in a lot of the sector charts, is that there was a bullish engulfing candle on a lot of the weekly charts in the sectors. So you see the S&P 500, the Nasdaq 100, communication services there, not staples, technology, spring type action in the industrials there, healthcare, and discretionary almost didn't quite make it through to new highs there. But you can see we had a lot of those had flushes down early in the week and then closed the week strongly near their highs and engulfed 2 or 3 weeks of price action in the majority of cases. You can see communication services, that was all the previous 3 weeks of price action in a single bar there. So there was a lot of good strong moves during the week. Admittedly, we closed, if we go back to the this chart, so there's Nasdaq, the Nasdaq QQQJ, you can see we had this strong move and there was a bit of a diminishing result as the week went on, and the Russell 2000, you see that it started to pull back into a test. So the thing I'm wary of is that basically we got 5 days of strong price action, and the results started to diminish as the week went on, and the volume lightened up as we went on as well. So I would expect potentially some backing up action still, like maybe early in the week, and then for a further follow through. But if that, it could just continue going up. Like it's spring type moves can be difficult to get into. You can sometimes turn into little lockout moves that are very, very hard to actually get into. So the little consolidation we had on Thursday there on that might well have been the only pause, and we could still be going higher there, or we could start to back up like we've seen on the small caps here. But I think if we start to see the small caps go again, I think we could be off into a potential stage 2 continuation attempt. So we go back into the groups here. You can see there's only 4 groups above the S&P 500 on the relative strength table here. So the SCTR score is the stock charts technical ranking score that it uses to. It's got long-term, medium-term, and short-term measures in it that calculate the score. So this is calculated against all of the other ETFs and stocks, depending on what you're looking at. I think when it's the indexes and ETFs and these, it's against the other ETFs. So anything above 90 is very strong, and you can see that tech, communication services, and real estate are all above 95 there. So exceptionally strong, and the Nasdaq's above the S&P 500 still, which has been for a little while now, about a month now. So whereas the Russell came off the bottom this week, which is a good sign because it moved down to the bottom the previous week, and we got some spring type action, and it came back off the bottom. So went from 15 to about 29 in the week. But sector wise, the lower, anything below the S&P 500 is generally to avoid until we start to see some strong movement back up the table again. So if the small caps starts moving strongly back up the table this week, then it might be consideration. But generally with the relative strength is that you want to be focusing mostly on stocks groups that are outperforming the S&P 500 always. So this is your zero line, as we refer to it on the Mansfield chart. So the S&P 500 is your ranking. So SCTR score of 90 at the moment is where the zero line is. So anything below that is underperforming. Right, next up, let's have a look at, this is the US total percentage of stocks above their 50-day, 150-day and 200-day moving averages combined chart. So this is a completely exclusive chart to my service, this stage analysis. No one else makes this that I know of. You can get the individual charts for these on stock charts and multiple other places, but I basically calculate, I get the data and I combine them into a single chart each week, as I find it really useful. I've talked through in the past, obviously, the signals of moving through the key moving averages. So the grey dotted is a 20-day moving average, and the the red line is the 50-day moving average. So basically, anything below the 50-day moving average, I consider a difficult trading environment, and anything above the 50-day moving average, I consider a positive trading environment and one to be more aggressive in. So as you can see, since I've talked about this multiple times before, but since February, where we topped out and started to move back below that key 70% level here, you can see we've been in a difficult trading environment. We've been on a sell signal as such for the indicator, which is, I use this as my sort of market timing model. So, but as I've said before, it's not so much bull or bear. I try and use it more as using the weight of evidence approach. So this is just one indicator amongst many, but it basically signals, when this signals it's a difficult trading environment, it's a pretty good proxy for the majority of indicators there. They're generally all doing pretty similar. So anything below this declining 50-day moving average is a difficult trading environment. And as you can see from, if we go back to the Russell here and the QQQJ, etc., since the February top here, I think it's pretty safe to say you can consider that a difficult trading environment, as we've basically gone sideways in the chop. So, and this has highlighted that. So we've come off from above 80% in February, and we're now down to 49.51% of stocks are above their key moving averages here. So it's pretty much 50-50 in the market at the moment between bulls and bears. So we'll see where we go from there here. But at the moment, the Nasdaq, this is the Nasdaq version on its own. So this is the combined for the entire US market, whereas this is the Nasdaq on its own. And again, this topped out earlier than the NYSE. If we look at the NYSE quickly, the NYSE didn't top out until recently in June, when it held up in its upper range, and that's why the S&P 500 was running to new highs, while the Nasdaq was going sideways after it topped out in February. So this shows that the Nasdaq was weak. We had this little pop up in May, early June time, and then we've come off again. So this is now down to 40.48% in the Nasdaq, whereas the NYSE is still 58%. So NYSE is still outperforming in terms of the amount of stocks above their key moving averages, but we're in a potentially better position in the Nasdaq as we've had more of a flush. So there's more room for maneuver in the Nasdaq, as the NYSE stocks are still coming off, whereas the Nasdaq stocks have had many months of basing and have come off a lot. So the rotation looks like it will be moving towards the Nasdaq stock type stocks in the next round of rotation as the NYSE stocks come off. But we could still, as you can see, when we get down to, we can always get down to the lower extremes, but we don't always. So during 2019 we had multiple pops down to about the mid 30 range in here, and we got down to that recently in here. So we could have made a short-term low and we could end up going sideways in the chop basically, or if we, for obviously the biggest moves, you get a move all the way into the lower ends of the scale, but you don't always get that. But obviously it's the ideal if we can, but it means big sell-off in the market. So there's no guarantee you're going to get that or not. Another custom breadth indicator that I make each week, I do this daily by calculating the point and figure double top breakouts and minus the point and figure double bottom breakdowns in using the point and figure charts. So this gives another sort of risk on risk off type indicator. The moving averages again do the same. So the green line is the 50-day and the 20-day is the red line is the 20-day moving average. So again, I use it in the same way, in that basically if you're above the key moving averages, you're in a positive environment, and if you're below the key moving averages, then you're in a negative, more difficult environment. So at the moment we're below the 20 and the 50-day moving average here of this, so we're in a difficult trading environment again for this. And it's highlighting that while the market is making new highs, that we're obviously still in a difficult environment. So breadth is showing a bit of a different picture to what's going on in the indexes. So it obviously still leads me to be cautious, as it's a bit like any of you know the game Jenga. There's it's basically like a tower of blocks, and basically you have to poke out the blocks like one by one without the tower falling down. And so you can get the core of the market, the Apples and the Microsofts and Googles, etc., can, like, they hold up the market much longer as they have bigger weightings, and the institutional traders move to those kind of areas when the small caps, etc., are selling off, and they keep the indexes going higher, while the under the surface that we've seen in the breadth carries on drifting off. So this is our Jenga tower as such. So we were at full strength tower up here, and now we're only got half strength tower. There's lots of holes in it, and one wrong move and the tower could collapse. So that's kind of my analogy of that, and kind of helps people, I think, when to try and think about what it is. As it doesn't mean it's going to collapse. It can be held up by a few really strong blocks, but there's often those will be the ones that are last to go. So hence why in my pension account I've been mostly 90% in the mega caps this year, as it's basically I was considering that rotational move into the larger caps earlier in the year, after the very strong move that we had last year, and the small caps starting to top out. Right, next up, let's go into so this is the Dow Jones US Industry Group's relative strength rankings that I showcase each week. This is again something that I do manually using stock charts data. I make a Google spreadsheet out of these. I copy and paste in each week for every single group here. There's 104. Create a new column, copy and paste in the SCTR scores, and then calculate the differences on the different weekly ones here. So it's pretty straightforward to do. It takes a little bit of manual labor, but it's really useful. As you can see, the RS score of 100 is your top score, and 1 is your lowest score down here. So renewable energy, i.e. solar, etc., has been bottom for multiple weeks now, about the last 3 months even. You can see it's not moved from 3 months ago. It was bottom 3 months ago, and it's still bottom, and you can see that in some of the charts. If I quickly look into one of the charts, I'll show you what's going on. Let's find some charts. So run, for example, here, you can see this has been it sold off. We had a little stage 4 breakdown attempt, and then it's popped back up again in here. Let me zoom in a bit on this. Change. You can see it was from the January top there. It sold off. So this has remained. The reason this has remained the weakest group, it's not even recovered back above the 200-day moving average yet. And you see dollar DWCRE. So DWCRE. So this is the actual group chart. So you can see it's pretty similar to the run chart. You see the actual group chart is still below its 50-day moving average, and it's still below its 200-day moving average here. And the 50 days below the 200-day moving average. So look at it on the weekly. You can see it's actually, the weekly chart's actually in a stage 4 decline here. So this is our weakest group. Obviously, it had a very strong stage 2 advance last year, and people were it was getting very frothy in the end of January there, and sold off hard. Started off in a stage 3 here, but the stage 3 didn't have much bounce at all. Made like a 40% bounce, and then moved off into stage 4, and we're now starting to roll over. And we could potentially still go lower on that, although, as we said, the individual stocks, as have been highlighted of late, have started to show signs of basing around this 50-day moving average. But that gives you a good idea of what how you can use those. So strongest group remains coal. So I think BTU is one of the major stocks in that group. So if we go to BTU here, yeah, you can see it rebounded up again this week. So you see it's been having a big stage 2 advance here. So we had a massive stage 4 decline through 2019, 2020. It bottomed out in November. We made this big base in here, started forming a stage 1 base after flushing out in stage 4. And then we've had a good strong stage 2 advance this year. So since the stage 2 breakout around this week here. So that was what was the pivot on that? So 5.21. So about there. So it's up over 100% since the stage 2A breakout back in early May. So 100% in 2 months. So that's why your DWCCOA group. So DW. This is the group chart itself. So you can see this it's moved into stage 2 back over here. So back in January time, and the actual group chart itself is up 70% on its own. So that's for an index group chart. So there's some very strong movers within the group. However, doesn't mean it's necessarily the best thing to buy right now. So what I look for with the RS rankings is stuff that's moving up the rankings and what's going on. So like this week, you can see here that restaurants and bars has moved up to 12 there, which is the 11th spot. So it's moved up to 11th spot, and it moved 25 places this week. It's not quite 25 because there's 104 stocks, but 25 is easier to say like that. So it's got now an RS score of 90. So it moved up 25 spots. So in restaurants and bars, we would then go, why is that group moving? So we come into here, we look at the group, the sector group summary, change it to 1 week. So what moved on the week? CMG. So you can quickly open up a few of these charts and see that CMG had a really strong move this week. I think it was based on earnings. So you can see on the weekly chart, it was up 17% on the week, made a stage 2 continuation breakout to new highs. Whereas some other ones in the group, not so good. Rave Restaurant, no good. This one, another 10% move in Wingstop. And another 9% in Shake Shack there. So you can quickly look through the group. You can change to 1 month, 3 month results, end of day. Stock charts is really good for all of the group and sector stuff. You can really get into the individual groups quickly and start looking around, and you can save them off into individual chart lists and run scans on them. But So you can see why restaurants and bars has moved up. So you could do a deeper dive into that group, and then see why, and if there's anything that's actionable within that group. Another thing I like to look at with the group stuff each week is basically the top 10, what's moving in and out of the top 10. So for example, we've got not much happening in there. REITs was off for the week, -5. Aluminium moved up 5 in the top 10. So nothing huge coming in or out of the top 10. It was pretty much flat. But if we changed the ranking system here to what moved on the week, so the biggest mover on the week was non-ferrous metals in the materials group. Then specialized consumer services, media agencies, clothing and accessories, restaurants and bars. So you can have a look and see which ones have moved. Again, you can click through these individual groups. So this was your biggest group mover of the week. You can see that we had multiple stocks moving over 10% there on the week. So so we've got some uranium stocks on the move there. So it looks like there's a bit of a theme with some uranium stuff going on there. So it came off a little bit, like 10%, but nothing major because they're not in a good position. But I always look out for things like the softwares and the semiconductors and etc., like the more growth related sectors. I'm not very interested in discretionary, and I'm not very interested in REITs and staples, etc. So if it's tech or industrials, etc., I'm a bit more materials and sometimes a little bit more interested in. So you can also obviously do this by different time frames here. So we can sort A% by 12 weeks. So 12 weeks it's footwear, which is because of Nike. So you can see in the footwear group here, Nike has moved off to new highs again. So where you can see we've had a very strong move since its earnings, and then it continued on for another 4% this week with a nice little bit of spring action there and off. So tennis ball action, as Mark Miodavini would say. Right, let's get out of the groups. Let me just revert that to there. Right, next up. Okay, next up, let's have a look at some of the stocks that are on my watch lists, the focus list of sorts as well. So a lot of these have come up during the week, and one thing I like to do with the weekly watch list is there's a lot of stocks during the week. There might be 10 to 30 results each day that make it onto the watch list, but the vast majority of them don't make it through the weekly cull. So each weekend I merge all of the individual stocks into a single list from the weekly watch list and create like a single 1 week watch list. Can change all the charts to a weekly chart, and then go through and look for the ones that close the week strongly as well, and are making good patterns on the weekly chart, because the weekly chart is more significant than what's going on the daily chart. So there'll be a lot that might have good daily charts, but then if they don't close the week well and they're not making good weekly patterns, then they generally get discarded. So one of this week's stocks that I highlighted a few times, and has been highlighted multiple times before, is Bill. So this has been making a big cup and handle type pattern on the weekly. You can see here this has had what we got there, 23-week cup and handle, which completed this week with a stage 2 continuation breakout / pivot, cup and handle pivot breakout there on average relative volume on the weekly. So no major move out to new highs there. So there's still a chance that this could be some up thrusting action in here. You could get what Gilmo calls a late stage base failure. I think it's LSFB, one way or the other. I've been reading his short sale book up recently, so I think he calls it a late stage base failure. So you can get this a lot in late in stage 2B, which the B means late in stage 2. So you can see we've been in stage 2 for a while. In Bill, for example, we've had multiple bases. So this is we got there 1, 2. This could be a 5th stage base here. So it's potential a stage 3, but it didn't quite break down enough for a stage 3. So I consider this still a late stage base within stage 2. on Bill. If we zoom in on the daily, you can see the cup and handle pattern a little bit better. We had this base within the base in here, so it made a really nice constructive base within the cup and handle pattern there on the lower end. We got the classic Wyckoff structure, your selling climax, automatic rally, secondary test. You had some phase B testing, you had a little bit of spring action in the test, and then we had a sign of strength rally and a backup, and then we've moved out to new highs here. See, the move out has been on diminishing volume there though, so we could still come back in a little bit more again. That it's not been a convincing stage 2 continuation breakout. What I look for with stage 2 continuation breakouts is at least 2 times the average daily volume on the breakout day. Don't always get it with the larger cap stocks, but a stock like Bill, I would expect it. You can see we do have good volume spikes in a stock like this. So I was this day here, I would wanted to that day there, I would have wanted that volume there to have been much higher, so at least 2 times, so more like this volume bar we've got there. So it was only about half that, so not a convincing breakout by any means yet. Obviously it's made a very nice structure, done the backing up action and moved on out, so, and we got that really nice weekly close where a bit of like a bullish engulfing candle. So it is looking good, but the fact that it had a weak volume breakout leads me to a bit of pause. And I feel like if we go down to the 2-hour chart on this, you can see the handle in more detail, which I've marked up with some Wyckoff markup there. So doing exactly the same as we just talked about on the daily, but on a smaller scale. So patterns within patterns, as Jack says. And so for me, what I'm looking for on this now, we've had the sign of strength rally following this near-term spring within the handle here that happened on Monday. So we had a really good move. You can see the volume has been diminishing as the week has gone on. So personally, I'm looking for this to pull back into the 195 to 192 area where there's support resistance there. So we'll quickly stick some Fibonacci on this. So it might not have made a top yet. It could still be going higher. But one way I look for how far a pullback might go is to stick a quick Fibonacci range on, and you can see a rough guide there, because I generally don't want to see a pullback more than 50% of a move from a sign of strength rally or any kind of swing when you're in a stage 2 advance. So if the pullback should generally come back in and hit the 61.8 or 50% area and sort of base in that zone there. So that's 156 to 152 on that, that's where I got that pullback number from, as well as obviously the support and resistance levels in here. And you can see there's a peak liquidity level in here as well. So around what we got there, 188 to 186 to 188. So you would want your stop loss underneath this peak liquidity zone, because that's where obviously the majority of orders are coming in. So that would act as a level of support as well. So if you did try and make an entry on a back down into here before it actually based, and you were just trying to catch the low, then you could get a 4 or 5% stop underneath a level of support there. So probably about 4.5%, which would get you underneath these 2 near-term pivots as well, and this peak liquidity level. But I wouldn't want to see it come below this level here. So this 186 would be the very lowest there, but I would expect it to sort of hold up in this area and start to move back off. So again, like we were talking about a minute ago, the 10-ish bull action that Mark Minervini talks about, we want to see a constructive pullback and move out. So that's what I'm looking for on Bill currently. So another one making a very similar pattern, and again, I think we're in a similar group. So software. So there's a lot of software names making similar cup and handle type patterns at the moment after the topping out in February, and then they've been basing for 4 to 5 months now. So we've got again a completion of a 23-week pattern on this cup and handle breakout. We've broken above. We got 5 weeks. 5 weeks of price action, which we did a bullish engulfing candle on. Again, the volume wasn't huge, so again gives me pause because we didn't have a strong volume move to the upside. But again, it's quite a big stock. It's the volume, dollar volume wise, it's quite big, but it's compared to its relative volume compared to its other volume. So you can see we've not had a big conviction move to the upside yet, although it had a really strong 13.91% move out of its 23-week base there. So we drop down to the daily chart. again, very similar pattern that we saw on Bill. So you've got your lower structure in here, you've got your cheat sort of entries down here, Minervini cheat areas coming out of the lower base, sort of Wyckoff structure in there, offer sort of potential spring type action on the undercut of the 200 day, and then test and follow through. So you've got some backing up action in here, and it got very tight. So that was a very tight little base in there. So 10% range, which is really good. And you see we had a really good spring within this. So again, if we drop down to the 2 hour on this, you can see this again, very similar structure to Bill. Made the classic Wyckoff structure. We made some spring. We didn't have any kind of testing action. It's just sprung straight out. So showing some really good relative strength. So this one's potentially one of my favorites, as it didn't even pause for a test. It just went straight out. Volume again low, was reasonably light. It did pick up a bit on Thursday there as it broke out. So it wasn't 2 times the average, but it was a little bit above average on Thursday on the breakout to new highs, and then followed through strongly on Friday. So again, I'll be looking for this to pull back into this area here. So 1550 to 1500 sort of area, about half of this move here, maybe a third of this move. So if it gets back to the 1550 area, then I'll be quite interested for a potential low risk entry attempt. So let me quickly go down to the 2 hour again on this one, so you can see where our peak liquidity zone is in here. So you can see in this zone, which is down to 1462, so 1500 to 1462. So it's about a 3% range of liquidity in there. So if it did get down to 1550, then you got 6 or 7% underneath that area there. So ideally, you might want to wait for it might need to get all the way down a little bit lower into the range, hit this peak liquidity level. So even as far down as 1500 there, which give you a bit of a tighter stop range within there. So potentially then only a 4% stop or so. But yeah, I'm going to be watching this one closely this week and set some alerts. Next up, we talked about this multiple times again. I did a few posts in the investor thing over the last 2 or 3 weeks. I highlighted the 3 weeks tight pattern that was forming within here, which then had a flush out at the end of the week. So it didn't complete. I think it did. Oh no, it did actually have 3 weeks tight, and then it flushed out the following week and rebounded strongly. So it came in at the area I talked about in the previous video where we talked about Roku, which was to pull back into the 400 area. So I was looking for a pullback to test in there. I didn't set an alert. We had a little ABC pullback for those that know Elliott Wave. So it's got earnings coming up in a week or so, the 4th of the 8th there. So 4th of August after the market closed. We had a really strong move of 12.6% on Friday. So on heavy volume, but the thing that concerned me about Friday's move was its sort of intention was to break out, and it only made it 2% above the pivot level here, and volume was 5 or 6 times the average here. So really heavy volume, and its intention was to break out, and yes, it broke out, but it didn't make a very big breakout. So although that was a big move on the day, its analog bar here, which had similarly reasonably strong volume as well, it didn't make it much above. So there's clearly some selling pressure in there still, and some of this was an increase in suppliers as well as an increase in demand. So I'm going to be where are we? If we zoom down to the 2 hour on this, I would be expecting this one to come back in a little bit harder one to read on the 2 hour there. So if we go back to the daily, I would be looking for this might be a potential short-term up thrust in here, and you could see some pullback and further handle action to develop. But with a big volume bar like this is now, I wouldn't want to see it come back below this bar now. So this bar is our new sort of range to look at. So there's a 10% range there. So you generally only want to see it back up around half of that. So back up to about 450. So if it comes back into about 450, then I'll be very interested, as that could be a potential low risk entry point there for a bit of tennis ball action to then move back out again. And if we look at it on the free ATR chart there, 438.90 is the 1 ATR level currently, and 417.56 is the 21 day. So yeah, I think the 460.25. So the 450 area that I just talked about is probably where I'd want to see it come back into. So 440 to 450, and then start to move back out again. Right. Next up is DOCU, which is Docusign. So again, we've talked about this one a fair few times. I highlighted it back on the spring and traded it back here on the earnings day on the Bible gap up, and I highlighted the previous analog of how it was a similar base structure that had formed in 2019 that we were seeing here. Although that was a stage 1 base and this was a stage 3 base, we had the very similar move with a flush out and the tightening up in the spring, then big thrust up in the spring with an earnings type gap up move back above the moving average. So I was using this one as an analog, and we were looking for it to move in a similar way, and it did. And throughout the last 8 weeks or so, it's continued to grind higher and tightened up around the top of there. So we had 4 or 5 weeks there around the top of the base, and then this week we moved out and made a new stage 2 continuation breakout attempt with a 9% move to new highs. You can see the relative strength line is back above the 0 line, which is flattening out here, and we're above the top of the range. So this one's looking very interesting, as we've got a very big cause on this now. So from this area here, so with the breakout, we've got 46 periods there. So we'll do a quick calculation on the point of figure chart here. Let me get a bigger, let's get it off scaling. So let's do it as a 10 box quickly. No, 10 box might be too much. 5. Right, so let's do a 5 box. So we've got our last point of support down here, and then we've got our buying climax up here. So you do the count back from the last point of support to the buying climax, the bar following that. So we've got 2, 4, 6, 8, 10, 12, 14, 16, 18, 20, 22, 24, 26, 28, 20, 29. So it's a 3 box reversal chart. So we've got 29 columns times 3 times the size of the box, which is 5. So we've got 435. So from the bottom here, say 435 plus 180. So that's a target of 615 from the spring on the calls on that. So 615 divided by our current level of 308. So we've got potential 99.6% calls within this one on the target. So that is a very big cause on Docu. So you've got a potential 100% move out of that, which would take us up to potentially up to around the 600 level if that follows through on that. So for me, that's a good enough reason with the big base, big cause, the decent price action to potentially have a look at this one for a potential position trade on a new low risk entry point that can form. So at the moment, we're not at an entry point. We've gone through. So I said I traded it. I got in here at this point, but I took an early exit on this bit here and the pullback there. So I did a half there and got out there. So I only got a 10% out of that before it moved up some more. So, but it's obviously moved up around 30% since there. So I only took a third out of this one. So I'll be looking to get back in, pull back in, potentially back into this range, whether it forms a higher range in here. And I'll be looking for the next low risk entry point to form. But this one's one of my favourites at the moment for a potential longer term hold. Okay, next up, let's look at PINS. So PINS. This has got earnings coming up. So let me just quickly grab the earnings chart. So we've got earnings on the 29th for the 7th, which I believe is Thursday. So you can see we've been making a stage 3 base here. We had a buying climax and automatic reaction here, then a lower secondary test, and it come off, and we had a little bit of an early spring type action still in phase B here. So I still class this as a stage 3 range because the spring type action was too early on this one. So you'd want to see the spring type action sort of over here in the range. Like this was an early spring within phase B of the range. So we made a lower high here, and we're starting to form a sort of raggedy V-shaped cup and handle type pattern. So it's not the most pretty of patterns at the moment. It's a bit choppy, but with earnings on Thursday, this could pop. So if we go out of here, I think we got the daily chart. And just look at the daily chart. So you can see this is the daily chart. We've got this sort of V type action, but you can see the diminishing result on this previous pullback that landed at the 50-day and the 200-day moving average there. And when we've popped up this week, near the end of the week, into this range. So I'll be looking for a move above this near-term pivot, which is at 81.67 on strong relative volume. But so pins is looking interesting. Let's go back to the weekly. And obviously, after I traded this one last year and had a good move through the stage 2 advance. SQ is another one. I believe this has also got earnings coming up. Let me look. 8 for the 5th of August. So this has got earnings come up on the 5th of August. Very similar pattern to what you can see in pins and PayPal, etc. So again, stage 3 range here. It was an early sort of spring type action in there. So still consider this stage 3 at the moment, but potential for a stage 2 continuation breakout to new highs. So keeping an eye on what's going on there. You can see the marked up earnings there. Earnings the 8th of the 5th, or 5th of the 8th, 2021. So after the market close, see this had a good strong move last week. So I'll be looking for it to pull back in a little bit, back into this pivot here. So what we got was the pivot 251, 255. So somewhere a little bit of a pullback into this sort of area. So 4 or 5% in this range would give a potential another lower high in there. Let's have a quick look at the. So the 180R level is at 252 and the 21-day is at 244 there pretty much. So somewhere in this area on the pullback would be interesting for that one. Next up, Lspd. So this is the weekly chart. I've been tracking this one for a while. So again, been making a really good stage 3 base, which has potentially turned into a stage 2 continuation breakout attempt. We had a sort of bullish engulfing type pattern here this last week, but didn't quite close above the previous week convincingly, but had a good 10% move on the week. Relative strengths near the highs. We're looking the daily chart. You can see they've been making this classic Wyckoff structure in here, a little bit of a local spring and backing up action there. We made a further back up into the 50-day moving average and moved off this week again. So just looking for this to consolidate a little bit in here, like Wyckoff wave type pattern, volatility contraction, whatever, and then make a stage 2 continuation to new highs. Another one I wanted to talk about quickly was Tesla. I think we've got earnings tomorrow, I believe. Let me just... 26th. So Tesla's got earnings tomorrow. So this will affect the automobiles group, which is near the bottom of the rankings at the moment because of how this has been. So we go all the way back here. You can see the automobiles group, which was last year's strongest group, has been moving down. It's off 88 since in the last 3 months and down to the third bottom at the moment. But if we come back in to the chart, you can see where it's been in basing. But if we look at our weekly chart, we've got this stage 3 range that's been forming. So we're right at the 200-day moving average. We could roll over and move into stage 4, or we could move back out again, make a stage 2 continuation. So this one's all on what's going on with earnings tomorrow, and then there'll be leveraged moves in other stocks like CCIV or FUV or various other names in the automobiles group, depending on what the results are. So this one is key. And then finally, a little trade I made on Friday. So I was in cash most of last week on the swing trades. Like I said, I'm fully invested in the pension account, which is mostly the mega caps at the moment, which had a really good week. We had the likes of Facebook and Adobe, etc., making new highs. So it was a good week for me on the pension account. But in the swing account, I was cash most of the week after getting stopped out of break even on the earlier trade in the week in Zim, which I did a little short on. But then obviously with the strength, that got stopped out at break even. So I made in the last half hour or so of the day on Friday, I got into GNRC, making this is the 2-hour chart here. See, it's had a stage 2 advance in the 2 hour there. It's got a really tight little bit of price action going on in here. So you can see we're got only a 2% under that little 2% range within the last few days of it. It got really tight, so I was liking how tight it had gotten, and the volume had dried up in the last day considerably on Friday. So it got in at 447.74, closed up a little bit on the day in the end. But if you look at the daily chart on this, I think it's pretty much near the highs in stage 2 advance. Look at the weekly quickly. So you see it's been in a stage 2 advance for a while now. Really strong stage 2 advance and really strong base. So the RS is at new highs already. So outperforming the market. 99. It's an industrial, but don't know huge amount above it, other than it's obviously forming a lovely chart pattern and got really tight, and the volume profile was good. So that was my little swing trade on Friday. Like I said, I'm going to be this week. I'm focused on a lot of the software names. So we'll see what goes on with this one. But I'll be looking at Bill, Shop, Pins, Roku, Docu, etc. Like all the ones I've just gone through. I think they're all key this week on how they behave. And so, yeah, I think that's where my focus is going to be this week. Okay, that's probably enough for now. I've been talking for ages. So thanks for watching, guys. And if you made it through to the end, then well done. And I hope you enjoyed it, and I appreciate you watching. So I'll see you on the next one.